Welcome back to Dinar Community Channel. In recent days, a wave of confidential directives circulating within the banking sector has sent ripples of excitement, caution, and anticipation through the global financial community, particularly among those closely watching the Iraqi dinar. Multiple credible reports from both private banking circles and public sector contacts have pointed to an unusual surge in behind-the-scenes activity. Bank managers across various regions have been instructed to prepare designated rooms for Iraqi dinar exchange operations. These orders, which appear to be coordinated at a high level, have triggered intense speculation about whether the long-awaited revaluation of the Iraqi currency is on the brink of public activation. For years, the revaluation of the Iraqi dinar has been the subject of heated debate, quiet insider confirmations, and persistent rumors. While skeptics have dismissed it as speculative fantasy, those following the trail of policy changes, central bank moves, and geopolitical realignments have argued that the day would inevitably come when the dinar's true market value would be recognized. Now, the sudden mobilization of bank staff to ready physical spaces for exchanges has been interpreted as one of the most concrete signs yet that preparations are entering the operational stage. Inside several major banks, managers have reportedly been told to clear certain high-security areas or private conference-style rooms to serve as controlled exchange environments. These spaces are not the standard teller counters where day-to-day transactions occur, but rather specialized rooms designed for high-value currency conversions. Security protocols are being heightened, and in some cases, temporary staff shifts are being arranged to ensure that these rooms can be staffed at odd hours, suggesting the possibility of exchanges occurring in a tightly scheduled and discreet manner. Such measures are not taken lightly in the banking industry. Preparing dedicated exchange rooms requires more than simply reserving office space. It involves securing cash reserves, verifying exchange rate systems, calibrating currency authentication machines, and ensuring compliance with both local and international anti-money laundering (AML) laws. The fact that these preparations are being conducted simultaneously across different institutions implies a level of coordination that would be difficult to dismiss as mere coincidence. The buzz began when several bank employees, speaking under conditions of anonymity, shared that they had been given sudden and urgent instructions to have these rooms ready within days. The orders reportedly came from regional managers who, in turn, were acting on directives from national or even corporate headquarters. While not every bank employee is privy to the full scope of such operations, the unusual nature of the requests, combined with the timing, has sparked a new wave of confidence among dinar holders. What adds weight to these developments is that they follow a series of recent moves by Iraq's own central bank, as well as statements from political leaders indicating that monetary reform is a national priority. Over the past several months, Iraq has been tightening its monetary policies, clamping down on currency smuggling, aligning its exchange rate mechanisms with international standards, and signaling to global financial institutions that it is ready to integrate more fully into the world economy. The pace of these reforms has accelerated notably in the past few weeks, with sudden announcements that seem to pave the way for a significant adjustment in the dinar's official exchange rate. Bank insiders have noted that the logistical preparations now underway are not limited to Iraq. Institutions in the United States, Europe, and parts of the Gulf region have also reportedly received similar directives. This global scope is critical. If the dinar's revaluation were to be released without prior international coordination, the risk of market chaos and transactional bottlenecks would be immense. Therefore, the apparent readiness on multiple continents points to an orchestrated rollout. Among the key features of these exchange rooms is their controlled environment. High-value currency exchanges bring unique challenges: counterfeit detection, verification of legitimate holdings, large cash outlays, and detailed record-keeping for compliance purposes. Banks are equipping these rooms with advanced scanners capable of reading security threads and watermarks embedded in dinar notes. Staff assigned to these rooms are being briefed on specialized protocols, which may include handling appointments through pre-approved scheduling systems rather than allowing walk-ins. This approach helps maintain order and prevents the overwhelming of bank resources. The secrecy surrounding these preparations is deliberate. Banks are keenly aware that premature disclosure of exchange rates or procedures could create a rush of customers and, potentially, security risks. Even within banking circles, information is being tightly compartmentalized. Frontline tellers may have no idea that a revaluation-related operation is being readied just a few rooms away. This compartmentalization serves a dual purpose. It ensures operational security and allows management to maintain control over the timing and flow of exchanges. For those holding Iraqi Dinar, these reports have ignited a renewed sense of urgency. Many investors have spent years, even decades, waiting for this moment, often amid skepticism from friends, family, and financial advisors. The idea that banks are physically preparing exchange rooms transforms the conversation from abstract speculation to tangible action. While no official rate has yet been released, the physical readiness of exchange environments suggests that the gap between now and activation may be shorter than ever. The choice to use dedicated exchange rooms also indicates that banks anticipate large volume transactions. Unlike typical currency exchanges, which may handle a few $100 or $1,000 worth of foreign currency at a time, these rooms are being prepared to process potentially millions of dollars in equivalent value. This scale requires not only physical security but also financial liquidity. Banks must have the capacity to meet payout obligations without disrupting other operations. Interestingly, some sources have reported that certain banks have begun discreetly notifying select clients, particularly those with pre-existing relationships or large holdings, that they should be ready for a call or message to schedule their exchanges. This invitation-only approach mirrors protocols used in other high-value financial events, such as structured private placements or special bond offerings. While it remains unclear whether this model will be applied universally, it underscores the likelihood that the first wave of exchanges will be carefully managed. Skeptics, of course, caution against interpreting these moves as proof that a revaluation is imminent. In the world of high finance, preparations can sometimes be made for contingencies that take months or even years to materialize. A bank might set up infrastructure in anticipation of a potential event, only for that event to be delayed due to political developments, economic shifts, or unforeseen crises. However, the difference here lies in the timing and the consistency of reports coming from multiple, unrelated sources. Adding another layer of intrigue, there have been whispers of non-disclosure agreements (NDAs) being readied for individuals participating in the first wave of exchanges. NDAs are not uncommon in high-level financial transactions, particularly those involving sensitive rate changes, but their presence here adds weight to the theory that something significant is on the horizon. If indeed banks are requiring participants to sign NDAs before exchanging dinar, it would suggest that rate information and transactional details are being treated as classified until the wider public rollout. The geopolitical backdrop to these developments cannot be ignored. Iraq's strategic importance in global energy markets, combined with its recent economic reforms, makes its currency a potentially powerful tool for reshaping regional trade. A revalued dinar could strengthen Iraq's purchasing power, reduce its dependency on certain foreign currencies, and position it as a stronger player in Middle Eastern commerce. International stakeholders, including the IMF and World Bank, have expressed interest in seeing Iraq achieve greater currency stability. A revaluation could be a step in that direction. In parallel, certain Gulf states have been quietly aligning their financial systems with Iraq's reforms, suggesting a broader regional strategy at play. The coordination of bank preparations across multiple countries may hint at a collective effort to integrate Iraq's new exchange rate into the global financial fabric without triggering disruptive market reactions. Such coordination would require months of planning, yet the visible signs are only now beginning to leak into public view. For ordinary dinar holders, the question now shifts from if to when and how. The when remains officially unconfirmed, though the flurry of activity suggests that the timeline could be far shorter than most expect. The how is beginning to take shape. Controlled exchange rooms, appointment-based systems, stringent verification, and possibly tiered rollout phases. These details will matter greatly for those seeking to maximize their returns and navigate the process smoothly. What is equally important is the growing emphasis on post-exchange financial planning. Banking insiders and wealth managers are warning clients not to let the excitement of an exchange overshadow the need for long-term security. Sudden wealth can present as many challenges as it does opportunities. Tax planning, investment diversification, and asset protection strategies must be considered from day one. For this reason, some exchange rooms may include financial advisors on site, ready to guide clients through immediate decisions after converting their currency. Despite the secrecy, one reality is becoming harder to ignore: something is clearly in motion. Whether it culminates in a public rate change within days, weeks, or months, the visible preparations in the banking sector mark a notable escalation in readiness. Those who have long tracked the signs know that such physical, tangible steps are rare, and often signal that the operational phase is at hand. In the coming days, attention will remain sharply focused on bank activity, central bank announcements, and geopolitical developments that could either accelerate or delay the anticipated exchange. The confluence of private confirmations, institutional readiness, and political signals suggests that the Iraqi dinar's story is entering a decisive chapter. While no one outside the highest levels of authority can state with certainty when the revaluation will be fully public, the fact that bank managers have been ordered to prepare exchange rooms speaks volumes about the seriousness of the moment. For now, holders of the dinar would do well to remain both optimistic and prepared. The rules of engagement, appointment requirements, identification protocols, verification processes, will likely be stringent, and those who understand the system in advance will be best positioned to navigate it successfully. Whether the call comes tomorrow or in the near future, the machinery is clearly being put in place. In a world where financial events of this magnitude rarely occur without warning to those paying attention, the signs are flashing brightly for those willing to see them. If the Iraqi dinar does revalue soon, historians may look back on this moment, the sudden, coordinated preparation of exchange rooms across the banking sector, as one of the clearest indicators that the era of speculation was drawing to a close, giving way to the reality of a long-awaited financial shift. Until then, the locked doors of those rooms remain symbols of a transformation poised just beyond the threshold, waiting for the command to begin. Like and subscribe for more videos.